Okay, good morning once again. We are ready to do our sixth and final assignment. It's the third of three in the Office Finance segment. So if you log on and go to Office Finance under Level 2 and find Budget, you're going to be at this screen. Once again, we've got a brief view, so some information about developing a budget in general, as well as doing it specifically in here. I encourage you to look at it, especially the end of this part. The calculator has 5 parts, so it'll be much like the income statement that we just did and the prior one on balance sheet, where you're going to find numbers, enter them, and it does some calculation for you. So once you reviewed this information and the need to know, you see here you've got another quiz. This is quiz number 8. Go ahead and take that, and then you'll be ready to move to your assignment. You should have enough information and knowledge about how to proceed with these directions. So here again, you've got guidance. You've got some illustrations here to try to help you better understand what a budget does and how you come up with it, and also appropriately the difference between an income statement and a budget. An income statement is, again, over a period of time, whereas we discussed earlier, a balance sheet is something that's a point in time, that you look up the information, you write it down, and at that point in time, this is what the balance sheet looks like. An income statement is over a period of time, whether it be a month or 3 months or a year. A budget is going to be the same type of thing. What's the difference between an income statement and a budget? An income statement is events that have already occurred. You've had a month that you finished, you've had a year that you finished in your business. You've got data of what actually occurred financially, what money came in, what money went out. And you can look at that and see how you did as a business. Your budget is planning ahead. It's looking at the numbers that you have done in the past and projecting into the future what you want to do different and better so that you are more profitable as a business. So one of the key components of this is, please, when you go through the section that is you creating your own office budget, you don't want to come up with a negative number. That means you want to fail. Once you've looked at your income statement and established that you're moving forward and you're profitable as a business, you then want to project that into a budget and a budget planning for the future that says, I want to succeed and make a business that's more valuable and more profitable, and in doing that I'm going to plan for it. So I'm going to plan for doing better in the budget than I actually did in the income statement. So review this guidance carefully. Look at the case for Dr. Smith, and you can go forward and take the last quiz, which is quiz 9. Once you finish that, you're now ready to do the office budget. So here again, you see a lot of information that you are going to have in this, but just remember, let's make it simple for you. Don't panic. First of all, in this whole first section at the top, you will put no numbers in any of these cells because they're not yellow. These will be populated by things you do down below. So this is all the summary section of what's created down below, which is essentially 2 areas. The first area, of course, being your revenue, the money coming into your business. So what are different categories? Well, primarily, revenue from operation or collection is going to be what you generate as a dentist, and in this case it's going to be any associates that you might have. We don't have that divided out essentially. And then revenue from your hygiene production as well. So if you had your in-house lab and you felt like you were going to do that and generate revenue from that, that would be added here. If you built a building and occupied part of it and leased another part, you would have revenue from the leasing of the other areas. Actually, I apologize, it does have an area for associates, so if you add an associate, how much they would produce. If you had any investments, associated with the business, that can go here. But typically, you're going to add in the revenue from operations, which is the total revenue that the practice is generating seeing patients. And once these numbers are filled in, it's going to populate up here in total gross revenue, monthly and yearly. So now you go to the second section. As I said, it has two sections. The first one is in revenue, money coming in. And the second section is fixed and semi-variable. So these are all the same categories that you had in the income statement. And as I said, you're projecting forward. So you're going to go back and look at your income statement and say, I expect to have higher expenses simply because I'm going to produce more dentistry, and inflation is going to affect some of these expenses. So I expect the numbers to go up in their expenses, but therefore I can plan the future knowing that and saying I'm going to increase my revenue either through my own production, my hygiene production, hiring an associate. Just remember, anytime you hire an employee, whether it's someone on the staff or another dental associate, your revenue may go up, but your overhead's going to go up too, and you have to take that into account. So go back and look at your income statement. Project in the future that you want to make the business more profitable. You're not going to cut expenses to do this. What you're going to do is increase your revenue, but you're going to see how your overhead's going to increase in each of these areas, but because you planned to increase your revenue certain ways, you're going to overcome that. So there's two sections to the expenses area. There's the fixed and semi-variable. That's because most all those expenses that are listed up there aren't going to change from month to month. Especially your dues, your financial charges, the salaries to your employees, your rent, your staff salaries and benefits. If you've got the same people working for you and their salaries are consistent from month to month until you give raises, these numbers are predominantly going to be fixed or slightly variable, and that's why they're all categorized together. The second section of expenses is variable costs. These categories are going to vary month to month depending on what your expenses are in each of them. So clinical supplies, one month you might find a special on some things and you'll buy extra. So therefore you spend more money than usual that month, but you're saving over time. In the next 3 or 4 months, you're not going to spend as much because you had an output early on. So over a period of time, it's going to average out. Your lab expenses are going to change month to month, depending on how much dentistry you do that requires laboratory. And again, any of these areas are going to be variable costs that can change from month to month. Once you've filled in these categories too, don't completely transfer the information from your income statement to here. Just use that as a reference and figure out if I'm going to increase my revenue, my percentages are going to change in each of these categories. So they're going to go up a little bit, but then in the end, my overhead should be similar percentage-wise to what it was before, but I've increased my revenue. So therefore, my net profit will go up. And then it's going to calculate your total variable cost. Then you've got to put in here what your income's going to be. You picked that last year. If you want to add in that you're going to contribute to a retirement plan through the business, that is available as a way to look at it in this screen. And all those numbers from revenue, fixed, semi-variable, and variable all come up here and populate. So here's what I look at. Once you finish this, and when I'm going to review it for you, what I'm going to look at is I'm going to look at the percentage number here in fixed costs. This is the most important part that I want you to be paying attention to. I'm going to look at the percentage number in fixed cost, and I'm going to look at the percentage number in variable cost. And those two numbers added together should be the same or less than the overhead percentage that you picked and that you also created in your income statement. And it can't be negative. So if we come down here and say revenue less your fixed and variable cost, and it's a negative percentage and or a negative number, you have essentially planned yourself to fail as a business. You created a budget, planned for the future, projected, and said, I'm going to do worse and I'm going to lose money. So please look at these numbers carefully and understand that you want to increase the revenue each year that you're generating in your practice. Different ways. You don't want to just cost contain it. You don't want to go down and reduce expenses simply to make a business more profitable. That's not a good philosophy. You want to increase your revenue, see that your expenses will be commensurate with that, and then come here and look at fixed costs, variable cost, add those two numbers together. So let's say you pick 60% as your overhead in the first session, and when you got done with your income statement, you had a generated overhead percentage in that of 61%, which was allowable. Then you come over here and you look at fixed costs with your new projected revenue and variable costs with your new projected revenue, and those two numbers add up to 72%. That doesn't make sense. So you've existed at 61%, and now you're saying it's going to cost you more to exist as a business, which is not good planning. You want these two numbers to add up to 60% or less along with your increased revenue. And therefore you end up with doctor's revenue or doctor's income that you're paying yourself, which you had from down below, and then you'll have a net revenue which you want to be at least 5 to 10%. So you've got money left over once the year is done and you've paid yourself. So go back and utilize the income statement to give you some guidance, but also look at the different areas within this website under Office Budget to give you insight. I also encourage you to get together with classmates. There will be some that will get this easier than others. They can help you with it. Get together, go over it, and remember that I can't sit and look at each plan, review it with you. You're going to need to review this video, review the instructions, go over it with classmates that can help you better understand it if you're having trouble, and fill this out as accurately as possible, and know that we're getting the opportunity then to have me review these plans, look at how well you followed the directions and understood it, and how well you did or didn't is therefore going to affect your final grade. So good luck in doing that. Thank you.